Hello, trading is closed on July 21st, 2025. As always, we'll do our disclaimer, go over our calls, and then make our prediction. This is my trading plan for Tuesday, which is July 22nd, 2025. Remember, it's a plan. I can always change it. I can be wrong and trade at your own risk. Well, we said this should be the pattern with the early low, which is this. Tomorrow should have the early high. We hit some lower targets, 62.85.94 and 62.70.48. We said unless we gapped up significantly, we should see those numbers. We gapped up significantly, so the numbers remain on the table, but not the time. We made a case for a high at Friday's high. We said if that were the right call, there should be lower prices in the first hour and Friday's high should hold. Well, obviously that didn't happen. That's why we have the rules that if we gap in the undesired direction, the call's killed before the open. You gap up like this, we're looking for lower prices. Keep those prices in mind, but no call on the time. This is just what we said. We said unless we gap up significantly, the rules call for them to print. But we did, so there was no call. We said we didn't get the plan, which was for the gap down, so something else is going on. So we have to figure out what else is going on, keeping in mind that we still have a lot of indicators compatible with the top, including Carolyn's and date. We also got the commonest thing, which was a gap and prompt move outside of Friday's range. It just wasn't the direction I thought was most likely, but again, that was killed according to the open. It was killed prior to the open. Well, during the day, MEJT said there was an ultimate sell signal here which worked. There was a MEJT plus 4 sell signal discussed in my book, and that worked. Neither one of these had to deliver the kind of drop that we got, but at least it told you right at the highs of the day that lower prices were coming, even though it didn't say by how much. Now it left the target 63.33.40, but let's not forget that the one thing that had been missing in our call for a top in this area was, even though it's not required, you almost always leave a failed MEJT target. So if we don't print this, that's a failed MEJT target at the high, and if, in capital letters, if we continue dropping, that was the one missing piece of the puzzle. Doesn't mean it won't print tomorrow, that we don't know. We're still in the demarked sell zone, but stops are based on closing prices. This isn't close to a stop, but if you're going to have a collapse, you should be down strongly in the first 3 days. Unless everything, the bottom drops out tomorrow, we're not going to be down strongly in the first 3 days. So I think any correction, either in terms of time or price, is likely going to be mild, after which the rally is going to continue. Well, we still say as long as this line holds, there's a call to travel 230 points over the line. That would take us in the middle 6400s, and if we can hold it, that still is possible. We are one day off of this low to high pattern from George Lindsay. If we drop tomorrow, I would forget a day, but we haven't dropped. I would just forgive a day, but we haven't dropped yet. So based on this, we could still continue higher, but there's always a but. We just have not been able to break through this line. This is the line you want to see hold. This is the line you want to break through. The ideal thing is to gap over it. I don't see us gapping over it tomorrow, although you never know. And if we don't gap over tomorrow, we're stopping at resistance again. we gapped up, hit a high, higher high, closed under all the intraday highs and also under the intraday lows. And if that's maintained at the open tomorrow, it's a negative pattern. It should lead to lower prices. It doesn't mean we have to close lower, but if, for instance, if we get down, this leaves an island reversal. It's the market's way of saying this whole day didn't count. So if we gap down, this whole rally to a new all-time high does not count. No matter how strong it looks intraday, you have to have confirmation the next day by trading over this close. And obviously this isn't the kind of action you want to see. It's looks very, very close to a pattern I described 20 to 25 years ago in a chat room I was on called coup de grace pattern. Here's how the coup de grace pattern works. First of all, you don't have a strong gap. Now this might kill the pattern. I don't know. But when I made the rules, the market was maybe 1/6 to 1/7 of where it is now. And if you divide this gap by 6 or 7, you have 1 or 2 points, and that's allowed. So maybe it'll work. No gap, no significant gap, small gaps allowed, no trade in the red, and then an unrelenting, strong move up throughout the first hour with no pullbacks of any significance. That's not really significant. Didn't even undercut this low of the bar before the bar of the high. So not a strong gap up in the beginning. You want a slight rally in the beginning and then higher and higher and higher with no pullbacks. A slightly higher high in the next hour. And then for hours and hours and hours, you have a very narrow, prolonged narrow range. Then by 2:30 Eastern Time, an hour and a half before the close, that's around here, the pattern's established. Sometimes you go a little bit higher. You can trade a little bit higher right at 3 o'clock Eastern. It's very common, but it's not required. You sometimes go a little bit higher that day or the next morning. But back when I came up with these rules, back 20, 25 years ago, you were in general within 3 points of the high, and then prices would drop. Now, why does this work? I think it's analogous to a wall into the close. You can think of this as a wall into the open. Instead of everyone getting positive on the market all at once and gapping up, first people put their feet into the water and then no one's around to sell. No sellers. Just keep going up, slow, steady, unrelenting rally. You never undercut the low of the prior 5-minute bar. Just no sellers. And it goes into the next hours. And then after no sellers, when big money comes to play, there are no buyers. It just goes nowhere. You've hit a new high. The people were just refused to sell at any price. No sellers. Suddenly no one's left to buy. Sometimes you get one more fling up from the retail crowd. But in general, it's a terminal pattern. It ends a strong multi-day rally and prices drop. Now, whether it'll work now or not, I don't know. In the 2000, 2005 market, I would see this pattern over and over again. In the 20 years since then, I've seen it maybe once before today. It just doesn't show up that often. I'm hoping it still works. I'm hoping that isn't too much of a gap. But it sure looks like it. Close doesn't count on this pattern, so this might kill it. But if we keep dropping, this is a terminal pattern for the whole rally. So we'll pencil this in. We'll see if it works. With only 2 occurrences or so in the last 20 years, it's hard to bet the house on this. But if it works, there's the pattern. It's rare, but 20, 25 years ago it was a very reliable pattern. Well, Tuesday's pattern has the early high regardless of where we open. It should also have a late low, which need not be lower than the early high. We can still rally. There's a higher target. If we don't gap down significantly, the rules call for it to print. Remember, many indicators have been calling for a top in this area. Today's rally needs a higher price to print or it doesn't count. And MEJT typically leaves a failed target and a major change in trend. We gapped up, hit a higher high, but closed under intraday highs, even under intraday lows. And if that's maintained, it's a bearish pattern. It should take us lower, even if we don't close lower. Picking tops in strong bull markets is a risky game, requiring a reasonable stop. But if we can hold on to a gap down tomorrow, the elements for a top still are present. On the other hand, if we gap, promptly overtake today's high, we've overcome strong resistance. Target in the mid 6,400, as we saw, would still be in play. So if this is followed by gapping down tomorrow and we hold the gap down, I think the coup de grace is playing out. Remember, a coup de grace, for people who don't want to look it up, is a shot to the head of a terminally wounded person or animal to put them out of its misery. It means the game's over. So if we do drop down from here, this is a terminal pattern. But that hasn't happened yet. The gap up here, don't have to do anything. But if we gap down and hold on to it, I would tend to believe it. We now have a failed target at a higher price, and these lower targets still should print at some time. So it's the pattern with the early high. It's usually negative, but doesn't have to be. But if we start dropping with some conviction, I think everything still fits. And that's today's call.